Friday, September 10th, 2021, Maneco 64, home of alternative economics and contrarian views. We're going to look back today briefly, about 10 years ago, where there was a major debt ceiling crisis. Congress couldn't agree on lifting the debt limit or the debt ceiling. And the United States Treasury had to resort to extraordinary measures. And that crisis lasted from around April to August. And of course, we're coming up to a very important fiscal date, which is the end of September, end of the fiscal year. And there's very little being talked about, I would say, about this debt ceiling problem. It's something that seems to rear its head every year now, or every time the debt ceiling is breached or is close to being breached. The debt ceiling has been suspended for a few years, but I think from August, beginning of August this year, they lifted the suspension. So now we're seeing Janet Yellen, the U.S. Treasury Secretary, send a very clear warning to Congress about what's going on. And I'm going to put some links below in the description about what happened in 2011. Wikipedia has it covered pretty well. The U.S. credit, of course, was downgraded by Standard & Poor's from AAA to AA plus in 2011. Of course, the CEO of Standard & Poor's basically got in trouble and had to resign for other questions and other problems. But I think that it didn't help that they downgraded the United States. It didn't help his job, and it sent a message, because in 2011, prior to the downgrade on August 5th, Standard & Poor's had already put the United States on a negative watch. So this year, we haven't seen, of course, any of the rating agencies, especially the ones in the U.S. and Western Europe. They haven't said a peep about this. I think they learned a lesson that the CEO of Standard & Poor's learned 10 years ago. But back in 2011, I remember this crisis. And I'm not saying this is what's going to happen now, but we saw the Dow drop almost 20% from around April, May till the summer that year, or September or thereabouts. We saw gold rise from 1400 all the way up to 1920. That was the all-time high at the time. Silver kind of preceded the move in gold by a few months, and it actually topped at $50 just around the time this crisis was starting. And the thing about this crisis is that the U.S. Treasury started using these extraordinary measures back in April 2011. Let's go through this letter. It's dated September 8th, so a couple of days ago, 2021, Department of the Treasury, and it's from the Secretary of the Treasury, and it's addressed to Nancy Pelosi, the Speaker of the House. So it says, "Dear Madam Speaker, I am writing to follow up on my previous letters regarding the debt limit and to provide additional information regarding the Treasury Department's ability to continue to finance the government in the absence of congressional action to address the debt limit or ceiling. After the debt limit was reinstated on August 1st, Treasury began employing certain extraordinary measures." So you see, this year it started in August. Last time it started like in April. "To continue to finance the government on a temporary basis. These measures, which are authorized by law and have been used in previous debt limit impasses, include a suspension of certain investments in the Civil Service Retirement and Disability Fund, the Postal Service Retiree Health Benefits Fund, and the government securities investment fund of the Federal Employees Retirement System Thrift Savings Plan. Once all available measures and cash on hand are fully exhausted, the United States of America would be unable to meet its obligations for the first time in our history. This is serious. And is it any wonder that so many countries are writing up agreements amongst themselves, especially with China? I saw the other day the Central Bank of Indonesia signed up an agreement with the People's Bank of China to trade with their own currencies, the yuan and the rupiah. So dropping the dollar. We're seeing that countries like Brazil, which historically hasn't really been a big buyer of gold, has actually doubled its gold reserves in the last few months. So I think foreign investors, foreign countries are concerned about this. They had a bit of a scare 10 years ago, and this time around it could be worse. So let's continue with the letter, though. Our estimates of the period of time that extraordinary measures will last have been refined in recent weeks. Although they continue to be subject to considerable uncertainty due to the normal challenges of forecasting the payments and receipts of the U.S. government, including the uncertainty in the level of corporate and individual taxes due September 15th, heightened by the additional uncertainty due to the pandemic and related economic relief and other factors. You can bet they will use this crisis we've had in the last 18 months if everything hits the fan, right? Anyway, let's continue. It's almost over, the letter, but I think it's important that we look at this. Given this uncertainty, the Treasury Department is not able to provide a specific estimate of how long the extraordinary measures will last. However, based on our best and most recent information, the most likely outcome is that cash and extraordinary measures will be exhausted during the month of October. We will continue to update Congress as more information becomes available. We have learned from past debt limit impasses that waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence, raise short-term borrowing costs for taxpayers, and negatively impact the credit rating of the United States. And I would say they're really leaving it to the last minute this time. Last time, they sorted it out by August 5th, which is 3 days after the deadline that Secretary Geithner at the time had set. A delay that calls into question the federal government's ability to meet all its obligations would likely cause irreparable damage to the U.S. economy and global financial markets, not to say the world economy, at a time when American families, communities, and businesses are still suffering from the effects of the ongoing global pandemic. It would be particularly irresponsible to put the full faith and credit of the United States at risk. And we all know that in the fiat currency system, where the currency is not backed by commodity money like gold and silver, faith and credit in the competence of the people running the United States government is paramount. And I think this could be in danger. I again note that Congress has addressed the debt limit in recent years through regular order with broad bipartisan support. I respectfully urge Congress to protect the full faith and credit of the United States by acting as soon as possible. Sincerely, Janet Yellen. So you can see who she sent this letter to here. You want to pause the video and have a look. And yes, I think it's pretty serious. Am I saying it's the end of the world? No. but it could reverberate throughout the world, through the global financial system. The liquidity in the financial system is created by U.S. Treasury bills, notes, and bonds. That's what the repo market is a big part of. The repo market is where the major financial institutions in the world bring their risk-free securities, which treasuries are considered, and they lend that to borrow cash. They use that as collateral, and they leverage that cash to keep this fiat Ponzi scheme going. So I think it's pretty serious. I think there's a bit of complacency by investors in general. Am I concerned? Not really. Maybe a little bit, because it could affect the whole world, the banking system here in the UK. But as far as investments and my exposure to the system is concerned, I'm not too concerned, because I've always said that I don't think it's a good time to be too exposed to this system. And that's why I hold physical gold and silver outside the market. That's why I hold, and that's why I have very little exposure to the system. But yeah, I think there is a lot of complacency, and there's not much time left. Last time around, people knew about this. The crisis started really heating up in April. I'm not here to try to tell you what to do. I'm just warning you. So with that, let's quickly look at the markets. It's a little later than usual. It's 9:45. I had a problem when I first recorded this video. I had to do it again. But anyway, we've got spot gold up about $7. It's at 1801.50. Spot silver is up 20 cents or 0.8% at 24.23. Yes, and that's why I've been telling people on this channel for the last 5-6 years that it doesn't hurt to have insurance outside the system. And yes, I interviewed a PhD economist yesterday, a guy who advised President Nixon, a guy who advised the New York Fed, a very mainstream guy, but who still believes in central banking. And I have to tell you, I don't. But I think it's good to talk to people that you don't agree completely with. But one thing he agrees with me is that when everything fails, the only thing that will work is gold and silver. And by everything failing, it's the fiat currency system. And I think this budget crisis could be one of those moments. So yes, Mr. Silber, who I interviewed yesterday, he seems pretty complacent. He doesn't really seem to think there's many troubles out there, even though he's very critical of the Federal Reserve. So let's continue and see where the markets are. As I said, there's a lot of complacency. The Dow future is up 200 points, 0.5%. It's back above 35,000. The NASDAQ 100 future is up 60, and the S&P is up 20. The FTSE future is up 30 at 7,052. To the foreign exchange market now, we've got sterling up 0.33%, 138.80. The euro is up 0.2. The dollar's up slightly versus the yen at 109.90. The dollar's down 0.33% though versus the yuan at 642.95. Aussie dollar is up 0.5%, just above 74. The dollar is down versus the Canadian dollar, 0.5% at 126.03. And the Kiwi dollar is up almost 0.2% at 71.50. So last time as well, when there was this debt ceiling crisis in 2011, I said that gold and silver did very well, of course. The Dow dropped about 19% that summer. The dollar was actually pretty stable, trading in a band between like 73 and 76 as per the dollar index. And I think that shows that a debt ceiling crisis, a crisis of faith and confidence in the dollar, would be a crisis of faith and confidence in all fiat currencies. They would probably stay very stable against each other, and the dollar as well. The dollar might weaken a bit, but I think the currencies that would do really well, and they showed us that in 2011, are gold and silver, commodities as well. Am I saying this is going to happen now? No, but it's a possibility. So a quick look here at the commodities. We got WTI crude up 1.75% at 69.18. We got high-grade copper up 1.75% as well at 4.36. We've got natural gas above $5, which is a 7-year high. It's at 5.04. So it's not going to be a nice winter for people in Europe and in the UK. The UK is very dependent on natural gas for its power and electricity generation for people who need to heat their homes. And yes, we saw today as well that the UK economy didn't grow as well as expected. FT says UK economic recovery slows as consumers rein in spending. Output rises 0.1% in July, missing economists' expectations of a 0.6 expansion. So I think it's going to get even worse, unfortunately. So yes, keep an eye on this budget impasse. I think that's going to be very important. Historically, they always find a way in the last minute, but who knows this time? The world is turned upside down in the last 18 months, that anything is possible, I would say. So, and I think the markets might be a little bit complacent. So maybe buy way out of the money put in the stock market indices. But even then, it would be a risk, I would say, a counterparty risk. Even if the markets drop very quickly and there's a lot of volatility, you might not be able to access your system to book your profits. So I would stay out of the system as much as possible. Take your popcorn out and watch the play, I would say. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.